travel bug. I forgot the stat. It was something crazy like we went from 10% of Americans having passports to over 50%. Now they just don't want to give it up. And we see where the TSA data has gone up and down, but more recently it's back up. In fact, it's on par with the highest level that it's been for a long time, which is good news because the flip side of that is that foreigners are coming into our country a little bit less, but still, this is pretty good overall, right? Americans are keeping this going. And my next guest is something that you can actually invest in. I want to bring in out Main Street Asset Management, their Chief Investment Officer, Aaron Gibbs. Aaron, let's talk about vacation stocks. You always look like you've been on vacation. You always have that like, I just came back from vacation look.
Happy life. It's a happy life.
So vacation stocks, American Airlines, why American?
So one, they just have very strong cash flow, but also partially because of the value play. They got particularly beaten up, a little harder than some of the others. And I think particularly with domestic travel that we've seen, this is just a real opportunity when it comes to picking from a great value point where we can see a lot of ramp up because it still has a very solid balance sheet. Yes, all the airlines get hit hard when there's oil stories, but American Airlines still hedges most of them, just like all major airlines.
And you like, so essentially you like the risk reward here.
I like the risk reward mostly because of the value compared to the other guys.
Hilton Grand Vacations.
Yep. So this actually.
That's where the rich folks go?
No, actually, this is their timeshare company. They've separated it from Hilton Hotels. So I know everybody sort of cringes when they hear timeshares, but it actually is a very good stock. Great cash flows, great sales to enterprise value. Again, a really good entry point here, and it looks like they're breaking out. So another one that, look, sometimes we just want a little more space. We don't just want a hotel room, and this is one of their opportunities.
No, I mean, I hear great things on timeshares for the operators.
Yeah, exactly.
Right.
So this is the operator.
All right, Hilton, not Marriott, Hilton.
Hilton, similar idea of that. They're both really strong brands. They have strong cash flows, good balance sheets. Hilton is the one that is more expensive. It's really popped. So this was sort of a recommendation sort of 3 weeks ago. But as we're consolidating, again, still very strong financials and fundamentals.
And then there's Airbnb, right? Which is sort of, I put the chart up here because, we had a pretty big breakout. What I like is that it tested, right? It tested the 200-day, keeps testing it, holding up above it. What's moving this right now? What's moving the needle?
So it's had a couple stumbles and stutters when it comes to its reports, and there's still a lot of uncertainty about whether they're really going to be able to beat and hit those very high growth numbers. And so this has been on my radar. Overall, they still have strong cash flows. I'm really looking for it to sort of break that 140 point, but it looks...
So this would be a nice breakout here,
exactly.
140. Maybe
above 140 is really that
160 kind of thing?
Exactly, and that's going to be your confirmation. And it's really about what the next report is going to look like and whether we're going to see those beats. All
right, I'm glad you wanted to talk about nuclear today because, I mean, I saw one firm today put a buy on 3 smaller nuclear plays, right? Even though it feels like, okay, everyone's like them. They've all made pretty big moves. This sort of underscores, though, like the world is racing on here. And what's not added on here is Japan, which says, hey, we want back in as well. So this is 2024. We know that the bar goes here and it's going to go here.
Yep.
So it's not one of these things that people are late to the game on. This is the way you play. Now, you liked it back here. You liked it back here. It made a pop. I mean, it popped, but then it started pulling back.
Yeah, I looked wrong for a little while.
So this is uranium, essentially.
Yes, so this is an uranium ETF. It's a global ETF. I like it because it buys all the stocks it would be really difficult for a U.S. investor to buy.
Right.
It's got companies from Uzbekistan and all over the world. So really well developed, and it really does highlight just what the uranium play can be here. And it's a derivative of essentially a tech play. Because as we do more AI, we need more energy. And this is one of those really good plays.
The race is on. I mean, I wouldn't be shocked to see Germany say, okay, you know what, we made a mistake and turn the nuclear power plants on. Before I let you go, I want your thoughts on just this session. I mean, I know we keep getting the tariff headlines, but even coming into today, it felt like one of those lazy summer days. We just hit all-time highs, coming off a 3-day vacation. Are you concerned with the action that you're seeing right now? No,
because I know we've seen lower volume all last week. There aren't a lot of big announcements or big economic reports coming out this week. So it's just going to be sort of a fumbling along summer vacation type of week. I'm not going to read too much into anything that happens this week.
Great stuff.
All right.
Always good seeing you.
Good to see you.
Always. By the way, speaking of big announcements, I got